Welcome to another episode of Stately Investing with your host, Burnett King. If you like the content I'm putting out there, give us a thumbs up. If you love the content I'm putting out there, give us a subscribe. It really helps the channel. If you have any questions, feel free to leave them in the comments section or send me an email at statelyinvesting@gmail.com. And let's get started with the show. Today we're talking coronavirus and its effect on the stock market, in particular my passive income portfolio, what I'm doing to mitigate, and why I'm not panicking and why you shouldn't either. I hope you guys will gain something informational and educational from this episode. The key takeaway is don't panic, but first let's jump into the numbers and see where things are. So let's look at my passive income stream for the past week. We are looking at all of my holdings, right? So all slices of the pie here. And you can see for the past week, so starting February 23rd, we're looking at a drop of 9.22%. So, pretty significant drop, moving into bearish territory, right? And the markets were really affected by coronavirus. They still are. So at this point in time, stocks have dropped precipitously. The Dow Jones has had its biggest point drop ever, not percentage drop, but biggest point drop ever. And people aren't sure when it's going to recover, right? Is this a short-term thing? Is this a long-term thing? A lot of the coronavirus fears and why the market is reacting the way it is because we don't know when it's going to end, right? It's spreading. It's potentially becoming more global in scale. And so, banks and advisors are starting to revise their numbers for what countries' GDP will look like for the rest of 2020. And so that's causing fear in the market. So if you look at my passive income stream it's down 9.22. If you compare it to the S&P 500, so closest proxy here is SPY. If you look at it over that same 5-day period, it's down 11.2%. So if you watch my last episode, episode 2, I talk a bit about how dividend growth investing can help mitigate things when the market is dropping, right? And that's mostly because you're investing in stable companies, right? So companies that aren't probably going to have as wild of swings when the market goes down, but also when it goes up. And then the other thing that mitigates are the dividends themselves, right? So in my portfolio, we're still pretty early in its inception here, but those dividends will protect me as time goes on, right? It's a kind of free income stream that really doesn't matter what the market does as long as those dividends don't get cut. So let's jump into my portfolio. You can see here overall now my income stream, passive income, has a negative return. And this week, just last week, it was positive, right? So if we look at all time, we're at 8.4% down. Both slices are about equal. We can also jump into my holdings here. And let's look at unrealized gains. So my biggest losers here, no surprise, ExxonMobil, right? So down 21%. I think last week it was down 15-ish%. Energy stocks are just getting hammered. Kind of separate from the coronavirus, or in addition to the coronavirus, oil prices have been down for a long period of time. I think they're at their lowest mark now. And so these energy companies are really getting hammered, those specifically dealing with oil resources. Also in my top losers here, Ben Franklin Resources, right? So this is a finance stock. Verizon is significantly down. Altria, right? So you can kind of see the list. Most of this list is turned negative. We do have some that have kept pretty substantial gains throughout this process, but mostly, it came down to timing, like when I started buying, not necessarily like we don't have a long enough time period now. Like I could have just bought at the right moment. And so some of these stocks are higher than others, although some I think have some kind of resistance to a lot of the market fears, in particular these top three. So Gilead Sciences is one of the few stocks that was up over the same period that the coronavirus started tanking the market, partially because they are developing vaccines against the coronavirus. So obviously the market is weighing that into their pricing, but overall that company is just super strong when it comes to its dividend and also its growth. Microsoft is another company that's kind of protected from a lot of this. And then Novo Nordisk, which is another pharmaceutical company. So you can see just by dollar amount, those are my top three, not necessarily by percentage amount in that order. So we look at my holdings and there's a lot of red, right? So why aren't I panicking at this point? I would say there's two things. So first, I don't really evaluate the worth of my stocks off of their price, right? My portfolio evaluation has very little to do with stock price. And actually in my next video, we're going to talk about how I evaluate my portfolio and like how I analyze whether or not stocks should be included in my portfolio or excluded, what to add in, what to cut, like all of that I'm going to cover in my next video. So stay tuned for that. That'll be episode 4. But stock price really isn't a huge impact on my strategy, right? My passive income strategy is about dividend gains, right? So even though the market has been down for my portfolio, $713, I'm offsetting some of that with earned dividends. And so I have to keep that in mind, right? So that's my primary reason for not panicking. I think, when I would start to cut stocks from my portfolio or remove them from my portfolio has more to do with when someone would cut the dividend. So if a company's board decides to cut the dividend because they're in such financial peril, then that gives me an indication that that's when I should exit that stock. And so I'm not really planning on cutting anything right now. I might rebalance a few things. Again, we'll analyze that in the next video and see what makes sense to rebalance. Like maybe I should reduce some of my holdings in these energy stocks, right? They tend to make up quite a bit of my portfolio. And so maybe there's something I want to lean away from a little bit while I increase others, but not sell them, right? Like I think all of these companies that I have now are pretty stable and have make sense to be in my portfolio. So the second reason I'm not panicking, right, is it's a good time to buy stocks. So, I always like buying things on sale, right? Like all of these are great stocks. All of these are great companies. Why not invest in them when their prices are low, right? So the biggest way to kind of make money on the market is to buy low and sell high, right? That's what you hear from a lot of people, and it's somewhat true, right? So like if you go to my activity over this past several days, you'll see that I made some additional deposits. So this $500 deposit on the 28th is my normal deposit, right? You can see it's every 2 weeks here. The previous one was on the 14th. So every 2 weeks, I'm putting $500 into this portfolio, but I also am adding additional deposits. So you see one here at $100. I think that was the first day the market really tanked. After the market really tanked on Monday, the 24th. So the next day I'm putting in $100. Similar here where I'm putting in $150. So I'm doing this because prices are dropping, right? And I believe in these stocks. I'm not shifting away from any of these holdings. And so I really want to buy when they're cheap. And if you have cash stored around, right? Like you've heard a lot of warnings about recessions and what you should do during a recession. The key is to have cash on hand to invest when that opportunity arises, right? So you never really know when the market's going to drop, or at least most people don't know when the market's going to drop. And so you should really invest when those prices are low and focus on making sure that you have a good portfolio of stocks that you think are valuable over the long period of time. And if you're not just trading, right, if you're really investing, then it makes sense to buy when they're low. So those are kind of the two reasons. Some other things that I wanted to cover real quick. So this whole concept of continuing to buy as prices fall or stock prices fall is this concept of dollar cost averaging, right? So over time, you want your costs to go down on your stocks, right? So let's look at my holdings again. You can see the cost basis here. So as I buy things when they're cheap, the cost basis goes down. You'll see this average price, right? And then you can see what I've purchased all of these shares for, and then the value, right? So as the stock market then comes back up, the value will go up, and the difference between my cost basis and my value is my unrealized gain. And so you really want to keep purchasing as prices fall down, because that lowers your cost basis. And then in turn, if you ever do sell that stock, your gains will be much bigger, assuming the value has gone up, right, over time. So that's a strategy that people, many rich people like to do, is to invest when things are on the way down. And then that way you're reaping the benefit when they go up, right? And so that's more of a growth strategy than necessarily a dividend growth investing strategy. But the concept holds, right? So why not purchase these stocks again when they're on sale? So I think I'm going to cut the video here. We're going to cut it short today. But the key is, don't panic. Hold on to your portfolio. If you have a good portfolio, it will be a good portfolio in the future, especially if you're focused on passive income and dividend growth. And hope for the pain to be over quickly, right? I think that the market is overreacting to coronavirus. Coronavirus will not be around forever. It's not something that is going to ruin the world economy. It potentially will slow things down, right? And that's where the market is reacting. But I honestly think that this will be a short-term dip, and probably will not blow us into a full recession. But you never know, right? So if that's the case, you remember, you're in this for the long term. Don't panic. Hopefully you have some cash on hand to get some good deals. Remember, buy things on sale, and hold on for the bumpy ride, right? I know everybody will be a lot happier when prices are going back up. But if you're just getting started, you have to remember, you have to have some kind of willpower to not sell everything, right? You don't want to recoup all of these. You're not going to recoup your losses if you sell at the bottom. So stay tuned. I hope you like the content today. We will be, like I said, evaluating my portfolio, my kind of monthly evaluations that I do. We're going to do the first one next episode, episode 4. If you like the content, give it a thumbs up, tell your friends, and obviously subscribe. It helps the channel a lot. Look forward to any of your comments on the coronavirus, or just what you're doing to not panic. Would love to see that in the comments. And thanks again. I'll see you next episode.